evening and welcome to another episode of Poor vs. Standard. Poor here. As always, we are not financial advisors, so any opinions within this podcast, YouTube video, what have you, are for entertainment purposes only, so please don't sue us. Don't do it. As always, if you have any questions, you want to reach out to us, feel free to check us out. You can find us on either YouTube in the comments sections. You can find us on Gmail at poorvstandard@gmail.com, or you can give us the old Twitter at vs_poor. Patrons, you know where to reach out, and we're more than happy to take those questions first. So, by all means, just check us out on Patreon. We love new subscribers every day. We love hearing from our patrons, and it's the best thing you can do to help us with being able to continue to give you the best information out there and purchase new things to learn, like our Alpha subscription, Seeking Alpha, and that kind of thing. Helps us get information and give it to you. Alright, so with that, let's get into it. What do you say? So, we gotta stop meeting like this on Mondays. Always down when I'm seeing you, but we are up above where we were last Monday because we're above 20K, so that's nice. But yeah, today we were down a lot on our Smile Direct, which is okay. It's above $6. Not bad. We're still up overall on it. Palantir is a very interesting case and what we're going to talk about most tonight, so I'm going to let that hang out for a second. But everything else we have was up slightly. A couple bucks here, a couple bucks there. Avant Brands was down. We own 6,000 shares of that, and it's currently worth 37 cents, so, big spender there. But yeah, we're down about $1,300 on that because we bought when it was in the 50-cent range, I believe. AMC, you guys know, we're watching that like a hawk. 37, but the shorts are at all-time highs. It's getting wild. But overall, the markets have been down. Currently, SPY is down 1.2%. Let's check out the futures. So the S&P 500 futures are down 0.6 after hours. NASDAQ's down 0.62. Everything's down about 0.5, 0.6 after hours. Some other things we're looking at. Coinbase is actually up $7 today. Not bad. We bought this one share when it was around $2 or 220 something. Because we're up $28 since we bought it. It was last week or the week before. Corsair Gaming, $25.70. Clover at $8, so that's nice. Yeah. There's a couple other ones I was looking at. A very good. There it is. Voyager Digital. Excuse me, I'm getting a cold. Is up over $10. I was watching it around $9 and thought that was a really good buy point, and I did tell the patrons that under $10 was a great buy. At $10, I think it's still a very good buy. I think this is gonna go some places. But yeah, just some of the things we're watching. Doximity. We've been watching this since it was 50. I've been telling the patrons. I told the patrons to buy anywhere between 50 and 65. And it shot all the way up at 100, and I gave the patrons a warning and told them, it's at 100. You've made a lot of money on this one. Feel free to sell some, make your profits, take some profits off the table, and let it ride back down because it was pretty inflated at that point. Currently down at 70. It depends on what the market does at this point. It's an okay buy, but I think I'd still be waiting. But yeah. That's a little bit of update on the stocks. And the crypto space, holy crap, guys. We were up to 57K on Bitcoin. We were over 3,500 on Ethereum. And Cardano was around 220, and it's actually dipped lower, which is interesting and enticing. Crypto is becoming more of a hedge against inflation than even gold and silver are. And a lot of people are seeing that. A lot of people are recognizing that. Banks have been buying the shit out of this. They're recognizing that they can't get away from it. And the one thing that happened this week was the executive order on studying how best to regulate crypto, which is bureaucracy speak for we're not really going to do anything. We're just going to watch it and see what happens, and maybe then we'll, once we have a better understanding of what it actually is, suggest some regulations. But until then, it's not being. But I do maintain that regulating it, well, not everyone's favorite idea, depending on the regulations, may be good for crypto in overall, because regulations give some investors more confidence that, okay, well, if the government's going to regulate it, then it must be safe. It's safer. Like, oh, we have the SEC to protect investors, which, if you know what I know and you know how I feel about that, that's questionable. SEC's there to protect the hedge funds, not the investors. But that's just my opinion. But yeah, very interesting stuff. So some regulation might be good for crypto as an overall. Give people more confidence in things, because right now you can basically create a crypto and make hundreds of thousands of dollars overnight by doing that, even if it's a shit coin, as it were. So always do your due diligence before investing in any crypto. Make sure you know what you're getting into. You may think you know, but always double check, verify sources and things like that, because I got into some things and they didn't pan out well back in like the 2016 era. But I do believe that crypto's here to stay. It's not going anywhere, and the nations that embrace it will be far ahead. And honestly, Ethereum and Cardano, I can see these doing amazing things over the next, decade. And the fact that there's some different cryptos that are trying to do, like, basically create their own digital network for gameplay and just online gaming, I think that's a whole brand new market that hasn't even been tapped yet. And that's going to be something that's going to make a lot of people a lot of money. I mean, there was one Algoland with their coin Mana. It was super cheap. I bought a lot, and then this was back in 2016. It shot up and then dropped back down. But it is still around, and it's basically like you spend the mana to buy things in game, and you convert dollars to buy more mana. I haven't really kept up on it, but it was like a first iteration of something I believe is going to do very, very well in the crypto space. Like, there's people who spend a shit ton of money on these stupid things like the... Now, not all NFTs are stupid, but I remember back in 2016, the big thing was the Crypto Kitties, which was essentially the first version of an NFT. It was a digital cat that you could... It was a one-of-a-kind digital cat on the Ethereum network, and you paid real hard-earned Ethereum for these little digital cats. You could have two of them, and they could repopulate and give you another original. And what was it? The progenitor cat, like the very first, sold for like, what was it, like $1 million or $3.2 million or something. It was something insane. But yes, NFTs are, I don't know how to put this. They're like the next fine art thing, I suppose. I don't think it's absolutely 100%. It's still a market in testing, like a beta test kind of market. It's not I don't know. It's a very niche market, and I don't know that it's gonna last the test of time. It might. It is connected to crypto, and there are a lot of people who are very interested in crypto, so it could very well. But some of these things, like, these NFL NFTs or the NBA NFTs that have, just like this card, one of a kind, is now worth $300,000 of Steph Curry. And I don't know, man. I don't know. it's a definite interesting concept to digitalize all your new old your old cardboard into new digital. But we'll see. We'll see. Um, so what I kind of wanted to talk about today is market memory, because currently we've seen a lot of stocks that we love and a lot of stocks we discuss hit the shitter. Like Tattooed Chef from a $25 mark all the way down to, it was down to 16, shot back up to 20, now it's around the 18.30. Palantir was up close to $28 and dropped down to almost 20. Currently we're at 23.50. And that's even after it had a massive contract news. It's literally come back down. Now, say what you will about, short plays and people talking about shorts and things like that. It has part of the market in that, but what I'm talking about is market memory. We've seen Corsair Gaming above $30. We've seen Palantir above $30, and the market remembers that. So the fact that we see these prices come down, you're going to see people like, oh wow, Palantir at $20 is a great deal, because I remember when it was like 35, $40. I'm going to buy that right now because it was there. There's no reason it couldn't get back there, right? Because the market remembers the price, that a very high price, and eventually it wants to get back there, and it will get back there. More often than not, assuming there's nothing fundamentally wrong with the company. Palantir, there's nothing fundamentally wrong with Corsair. Their numbers are astounding, amazing numbers. The profit, year-over-year growth, just fantastic company. Tattooed Chef, their numbers are out of this world. And one of the other ones we talked about, Voyager Digital, the the growth on this company is insane. I can't even describe to you like just how much growth, like there hundreds of percent growth year over year, just insane. And I think with the rise of crypto, you're going to see very, very wild things from Voyager Digital. I think if they execute correctly, that company will do very, very well. And it was up at $15. It's currently at 10. And I can see that thing getting back to that $20 mark that it was at the one point. So yeah, market remembers, and people remember, and people will buy these things on discounts because they're like, wow, that's such a good deal. I remember when. I remember when is that key phrase. I remember when Bitcoin was $62,000. It's under that. It's down to 40. It was in the 30s. Oh man, I remember when it was 64,000. I gotta buy it here because it can probably go back there. It'll probably go back there. I fully believe Bitcoin will not only go back there, but it will hit new highs. I fully believe that Cardano, that was around $3 earlier this year, will surpass that $3 mark. And that's why I'm buying heavy now, because it's on a discount. And I believe that because the market has memories. So yeah, that's pretty much what I want to talk about, is that even though we're in red, even though we're seeing things come down, I mean, Amazon under a 3,300, I think that's a pretty delicious deal. If Amazon breaks below 3,000, I will probably buy a full share or two. I mean, I've told my patrons, and I'm pretty sure I've told you guys, I have this credit call debit spread, excuse me, 33.20 to 33.30 for December, and I think by December it'll probably get there. And if it does, I've doubled up my money, so that'll be exciting. And I know some of the patrons got in at an even better price than I did. I got in at $500. It's currently at $405, and I'm sure some of the patrons have probably gotten in at a better price than even I did. So good for them. CleanSpark. I know a lot of people love this stock. I know they do. I've seen YouTubes about this thing, just like, and it's it's a decent looking stock for that, the electric vehicle market and that sort of thing. I think it will do well, and that's why I have these long spreads. I mean, we're talking, June of next year, January of the year after, leaps, as it were. I think that by those times that this will be much higher than it is. So yeah, that's the good stuff. I also think we're still in a volatile time. We could go down another 5-10% just as easily as we could go back up 5-10%. The S&P at the current price, we're not at the high of the 450, and we're still testing, lows every now and then. We broke out of the 430s. We got into the 420s a couple days ago, last week, and we could go lower. It could be, dead cat bouncing. It could be that kind of thing. I mean, if you look, that's not a good chart. That's the 30-minute chart. That's down low. So if we did this for 2 weeks out, yeah, that's a 2 hour. Let's go to the daily. Can we go to the daily? Let's go to the daily. Let's plant this out for a year and do 1 day. So yeah, right around the beginning of September, we started falling off. Huge drop, back up, huge drop, downtrend. Got an uptrend starting in the beginning of October, and now we've come back down to a downtrend because inflation numbers came out, and we have CPI data coming out on Wednesday, and depending on what that does, I mean, we had a giant miss on jobs numbers, so there's a couple things left that could give pause to the market. One of them doesn't happen until December now with the debt ceiling, and we'll see where that goes. But currently, right now, I mean, the overarching trend looks to be about a little bit of a downtrend. Yeah, on the weeklies. I mean, look at how this is an immaculate freaking just up run right here. Ever since November of last year all the way up through August of this year. Just a nice, beautiful up run. It's impressive. But yeah, you'll see things like this. And this downturn, I mean, if we, well, let me do that. So that's cool. So let's go 3 years. So here's that November. There's that upswing. So right now, this is a lot like the August to September of last year. August, September 2020. It's about the same percentage down. But, nothing like that COVID drop. But, I mean, like, look at, before COVID, 338 was the high. Shot all the way down to just above 200. Since then, we've been on this upward tear, like you wouldn't believe. And we went from 330, 340, all the way up to 450, over 100. I mean, that's a huge percentage gain in a year. I mean, you would have made a lot of money just investing in the S&P. Wild stuff. And this is normal. This is a correction. This is a breather. You're gonna have that every now and then. I mean, we had a small one in February and March in comparison to this, and again that August September correction, and even in May and June of 2020. It's natural. It's normal. You can't just go up, up, up. You've got to have these little dips. You got to have these little humps because that's the market correcting itself to make sure that there's still liquidity in the markets and things like that. This will peter out and it will go back up. I mean, this is a 3-year chart. Look at the ups versus the downs. Those are weekly candles. It's insane. But I hope that you guys just, you and ladies, I hope you're all trading well, trading carefully, And I hope you're sticking to the plan. You have to have a plan when you go into these things. Because if you have an entry plan and you don't have an exit plan, you're not going to be doing well at all. Your exit plan is what matters, because you could have the best entrance and then sell for, a 10-cent profit on 100 shares, but that's eaten up by your, fees and all that and inflation. So you got to have an exit plan. You got to know the value of what you hold. If you have the value of what you hold and you know what you're holding, you'll be fine. You won't panic. You won't stress about the downswings. You're like, yeah, this stock right here, this tattooed chef, I know what that is. That's a $40 stock easily. I can get in at $18. It's a deal. I've been holding this thing since it was 20 and it's down. I'm not worried about that. Perfectly fine. No problems. So, you've got to know what it's worth. You've got to know what you're going to do with it, when you're willing to sell it, and how long you're willing to hold it. You've got to be able to keep up on the companies, do your due diligence, and make sure that you can read the financials. You can do all those things, you'll be making money hand over fist in no time. And I am still working on coursework. This is going to be a lot of things, and it's going to come out little by little, but I want to make sure that I have it all done before I release the first one, because I don't want you guys to be waiting like 6-7 months for this whole thing, like to have a pause or a break or anything like that. So I'm going to redo all the option stuff, and I'm going to put it up on YouTube, just so there's visuals for everything. And I'll probably throw in some bonus videos, like, this is how you read financials, this is how you take a look at, your 10Qs, 10Ks, that kind of thing. Because those are important things to know. Those are important things to learn. And having those weapons in your arsenal is a great way to make sure that you outperform the market. And that's what we're here to do. We're here to pick individual stocks because we want to outperform the market. Because if we're not outperforming the market, why the hell are we doing all this work? Why the hell are we doing all this research? I know some of you get it because, well, like me, you've probably seen this public portfolio go to shit. And that's why, retirement accounts are in like VONG, VOO, and that kind of thing, because that's the market and that's safe, right? For now, at least. So I hope you're all doing well, and we'll make sure to follow me on Twitter, because I will release if we do any options plays. It's just not been a market where I've seen a lot of tasty options, except for some in the Smile Direct Club as it goes up or down from the Bollinger Bands and things, which actually I didn't even show you. So if you take a look at the 5-minute, you see that it's coming down through on the Bollinger Bands. The RSI is oversold. And then as you get, up into the 1 hour, you can see that it's starting to come down even further. And the daily is kind of middling, so it could go either way on the daily. But short term, Smile Direct Club probably going to go up a little bit. That'd be my guess. But yeah, so just follow the Twitter at VS_poor. Comment, like, subscribe. I appreciate it greatly, and it helps out the channel. So as always, trade well and be safe. And thanks for tuning in.